Year. Happy New Year. I'm saying Happy New Year because this is our first official program for the year 2024. I pray that this year will be a very fruitful year for every one of us. Amen. Thanks for joining us. Thanks for joining us. I hope we had a fantastic Valentine's Day yesterday. I hope we celebrated our Valentine, a day we celebrate our families, our loved ones, and ourselves. We deserve to celebrate ourselves. Thanks for joining us. I can see a lot of people are joining. Thank you so much. Thank you for joining. My name is Mary Ohaleto Woma from the Marketing and Business Development Unit of First Central Credit Bureau, yours truly independent and reliable credit bureau in Nigeria. I welcome you all once again. Welcome you. Yeah, thank you so much. We already have about over 200 joining. Thank you so much. Thank you so much. So coming this morning, I've been thinking, what do I say? How do I even start this event? What do I say? Considering how excited I am to be in this event this morning, all that just came to my mind just to tell you, please fasten your seatbelt and stay tuned and enjoy the event, because I've been privileged to see the profile of the speakers lined up for today's event. Trust me, we are in for a great ride. So the theme we are considering today is navigating the financial landscape in 2024. Navigating the financial landscape in 2024. You can all agree with me that there are so many uncertainties facing the financial space. So whether you're a lender or borrower, market woman, whatever class you belong, as long as you have to do something with money, go to market, buy things, you can, we all are aware of what is going on in our economy. In fact, it's not easy. There's so many uncertainties facing us. But however, in the midst of all these challenges lies great potential opportunities for us. Yeah, great opportunities for us. That is why we are considering this topic, navigating the financial landscape in the year 2024, this first quarter of the year. So without wasting your time, let me proceed into the event proper by introducing my team who will be moderating this great program with me. I have Mr. Tunde Afolabi. I have Mr. Lalekon Abbas. I have Mrs. Tosin Ola. Welcome, guys.
Thank you, Madam, for the introduction. Thank you. Good morning.
Thank you so much. So, ladies and gentlemen, please, if you can hear me, just help me welcome yourself. Everyone, just help me welcome yourself. Just put in on the comment, the chat box, just welcome yourself, because you are the reason why we are here today. You are the reason why we are here today. So thank you again and again. I can't stop thanking you for joining us in this program. Thank you for joining. And we have lined up top-notch speakers. Top-notch speakers who are leaders in various sectors, ready to share their experience and insight with us this morning. In fact, I've been privileged to interact with them one way or the other at the cost of my career. And I'm always baffled at the level of their knowledge, at the exposure. In fact, it's so wide. It's so wide. All I want to say to you, just sit back, listen to them, and thank us later. Thank us later. Yes, I got to comment. Thank you. Welcoming yourselves. Thank you so much. Hi, Mr. Tunde. Are you ready for us? Please, let's have you present the profile of amazing speakers to the audience.
Thank you, Madam Mary. Thank you. I want to warmly welcome everyone to this great event this morning. In a moment, I'll be reading out the profile and introducing our hosts, guest speakers, and keynote speakers to us this morning. So So I'm starting this morning by introducing our host, Mr. Deji Peters. By reading out his profile first, Deji Peters has over 15 years of working experience in business development analytics from within and outside Nigeria. He's a graduate of economics and holds an MBA from Durham University. He's a professional and associate member of various institutions, which includes Nigerian Institute of Management, Chartered Institute of Stockbrokers, Microsoft Corporations, Chartered Institute of Administration and Fraud Examiners, amongst others. I want to welcome you this morning. I introduce to you Mr. Deji Peters, MD CEO of First Central Credit Bureau. Mr. Deji Peters, good morning and welcome, sir.
Thank you very much, Tim. Thank you very much, Mary. Just give me 30 seconds, please.
Thank you,
so
sir.
I can...
Thank you, sir. We'll call, Madam Mary will still call you back for your presentation, for your host presentation, sir. So I'm going to read out the next profile, which is on for our keynote speaker, Dr. Olubunmi Peters, a consummate human and material resources manager with over 35 years of post-graduation experience, garnered in both the United States of America and Nigeria. He holds a bachelor's degree in civil engineering from the University of Texas at El Paso and a master's degree program in highway engineering from California State University, Los Angeles, California, USA. He's a specialist in engineering economy and a consummate enthusiast of properly constituted infrastructure development, management, and maintenance initiatives. He was the managing director, CEO of the Federal Road Maintenance Agency, FEMA, from March 2006 to July 2009. Retired from the public service of the Federation on 1st October 2009. Dr. Peters is a respected community leader in various dimensions and holds numerous board positions within and outside Nigeria. Some of these include board membership of Rose Nigerian PLC, chairman of the board of directors of Prepaid Medical Services Limited, chairmanship of Covenant Securities and Assets Management Limited, and member of the board of trustees of Sean University, Raleigh, North Carolina, USA, among others. He represents ICIB and BIP Investment Limited, a diversified holding company with interest in several sectors. Dr. Peters has been a proud platinum holder of an American Express credit card since 1980 and has maintained a perfect credit score history since 1975. Dr. Olubunmi Peters will be speaking on the evolving role of individuals in the credit bureau space. I present to you Dr. Olubunmi Peters. Dr. Olubunmi Peters, good morning and welcome, sir.
Yes, good morning, Tunde, Afolabi, and Mary. It's a pleasure being here.
Thank you, sir.
Looking forward to adding a little value. Thank you.
Thank you, sir. We are glad to have you on board, sir. I present to you our next speaker, Dr. Edmond Otaigbe, a corporate executive with exemplary leadership skills, visionary zeal, professionalism, and a delivery mindset. Edmond has a diverse background, supporting and leading business development efforts in the financial services industry. He holds a doctorate in business administration from Walden University, USA, an MBA from the University of Benin, and a BA in civil engineering from the Federal University of Technology, Akure. Edmond is an alumnus of the Harvard Business School, a member of the Project Management Institute, Nigerian Society of Engineers, Council for the Regulation of Engineering Nigeria, COREN, Institute of Risk Management, UK, an honorable member of the Chartered Institute of Bankers of Nigeria, CIBN. Dr. Edmond enjoys design and implementation of high-impacting project efficiency. He leads a team of dedicated cross-functional technical professionals, managing over 300 projects with a combined portfolio size of 1.2 trillion across real estate, maritime aviation, manufacturing, and oil and gas sectors. He's currently the group head, risk management and project monitoring at Access Bank PLC. where he leads credit governance initiatives across the banking group and subsidiaries. He is also involved in the risk management orchestration to optimize opportunities and the risk treatment threats in the enterprise-wide ecosystem. Dr. Edmond Otaigbe will be speaking on debt management, repayment plans, avoiding credit score damage, and tips of saving in the new year. I present to you Dr. Edmond Otaigbe. Dr. Edmond, good morning and welcome, sir.
Good morning, Tunde, and everyone. Happy to be here.
Thank you very much, sir. We're glad to have you on board, sir. I also present to you our guest speaker, Mr. Ikemefula Nwachukwu. Ikemefula Nwachukwu is the head of personal banking in the First Bank of Nigeria Limited. In a banking experience spanning over 21 years, he has worked in various leadership capacities in services, retail, commercial, and public sector banking in First Bank, Bank PHP, now Keystone Bank, and GT Bank. Before rejoining First Bank in 2012, Mr. Nwachukwu holds a Bachelor of Science degree in chemistry from the University of Nigeria, a postgraduate diploma in banking and finance, and a Master of Science degree in economics. He was a co-author of prestigious First Bank Senior Management Development Program. He's also a Conferry Group, A-Group Certified Job Evaluator, a DDI Certified Facilitator, and a Certified Retail Banker. In addition, Mr. Nwachukwu is a Fellow of the Institute of Credit Administration, ICA, a Fellow of the Certified of Institute of Finance and Control of Nigeria, CIFCN, an Associate of the Nigerian Institute of Management, Chartered, an Associate of the Certified Institute of Nigeria Economists, and an Honorary Senior Member of the Chartered Institute of Bankers of Nigeria. Mr. Nwachukwu will be speaking on emerging trends, open banking and data sharing, pros and cons, along with opportunities for consumers and credit bureau. I present to you Mr. Ikemefula Nwachukwu. Mr. Ikemefula Nwachukwu, good morning and welcome, sir. We're glad to have you on board, sir. Mr. Nwachukwu, are you there, sir?
Yes, Tunde, good morning.
Good morning and welcome, sir.
Good to be here. Good morning, participants, and you're welcome to this webinar.
Thank you very much, sir. We are glad to have you on board, sir. Thank you very much, everyone. I welcome you. Sit tight and enjoy the ride while I hand over the continuation of the program to Madam Mary. Madam Mary, over to you, ma'am. Thank you.
Thank you so much, Mr. Tunde, for the beautiful presentation. Thank you so much. And to our great listeners, please note that this event is being recorded and will be shared with all registered participants. And we're also aware that a lot of people have connected to this event via our different social media handles. So kindly drop your questions and the Q&A box. All will be attended towards the end of this event. Also, feel free to drop your comments on the chat box. Drop your comments. And ladies and gentlemen, it is my great pleasure to announce to you that today's webinar is packed or packaged with Learn and Win section, where some of us will be going home with tangible gifts, shopping vouchers worth 50,000 naira each. In this our economy, we are very, very generous. So just by answering one simple question like that on this event, I wish I can participate, honestly. So please listen attentively, follow all the instructions when the time comes, okay? So please join me as we welcome the MD CEO of First Central Credit Bureau for his opening speech. Thank you. Mr. MD, over to you. Mr. MD, can you hear me? Mr. MD, if you are talking, because if you are muted. You're mute. Can you unmute yourself?
No, I did unmute for a while, but I think the system decided to have a mind of its own. Thank you once again for that wonderful introduction. Right.
Thank you. Welcome.
Thank you. If you can hear me well, I think the system just, yeah. Well, can you still hear me, please?
Can hear you loud and clear, sir.
Yes, sir.
Right, thank you very much. I was trying to start a video, but I failed to start. Right, so I was just going to say a very big thank you in the interim to everyone, to our speakers, all the doctors in the house. Once again, we thank you very much. We call every now and then, and every time you graciously answer us. We don't take this for granted. We are glad for it. It's a wonderful privilege. And to the audience, the beauty of credit inclusion, to every single individual here that has been facilitators in the credit space. We want to say a very big thank you also for taking the time to join this. We're streaming live on Twitter, on YouTube, on Instagram, Twitter, and every other social media handling as we speak. And even that will be made available to everyone hearing. Without further ado, I would allow the speakers go, so that we can learn from it, and more importantly, so that we too can draw from some of the experience that they have on how best to also grow ourselves organically in-house. And for this purpose, we've drawn not just professionals from within the credit or finance space, we've drawn from other sectors that also provide data for the purpose of credit inclusion. And it's a beautiful thing to see how the world is transforming globally, how the data that we currently have within the credit space is starting to transform into a larger population based on the available data set. Without further ado, I would like for the speakers to go at it, but before they do, which is also going to be the introduction of my final remark, I'd like to say that the past and the future are always present. And that's to say that what we do or what we have done in the past would always have its ripple effects on our present situation. And what we do presently has massive implication with the future. And whether we take the right or wrong turn, or our best, or our what timeliness of action we engage in at the time when we do that, is also very powerful. And so for that purpose, we draw in all these professionals to speak to us based on their own experience, and more importantly, how they've also been able to stage concrete systems and structures and institutions and creations for the purpose of advancement within the credit space. And when we draw from this, we're also now able to use that, in practical utility for the purpose of advancement, at least within the credit space. Thank you once again. And Madam Mary, please, I will hand over to you once again for the purpose of introducing the speakers. Thank you.
Thank you so much, Mr. MD, for that wonderful opening remark. Thank you so much. Okay, right now we'll be calling on our first speaker of today's event in the person of Dr. Edmond Otaibe, Group Head, Credit Documentation and Administration and Governance in Access Bank PLC, for his presentation. Dr. Edmond will be speaking to us on debt management, repayment plan, how to avoid credit score damage, and tips for savings in this new year. Once again, accept our sincere condolence on the death of your former MD CEO. We pray that the good Lord will grant the bank and his family the fortitude to bear this great loss. Amen. Over to you, sir.
Amen. Thank you. Thank you very much, Mary, and everyone.
Also have the privilege, Mr. Taigbe, may I also have the privilege of just saying, do accept and extend our condolences to the bank and the family of your late MD. Thank you.
Thank you. Thank you so much, Dr. Olubunmi. I sincerely appreciate this. So this is a very interesting topic, and I must commend First Central for coming up with it. We're in very interesting times, a time where almost everything that has been forecasted around exchange rates. I could remember people saying we would never get to 1,000 naira to a dollar. And when it happens, and of course, Nigeria has defied it. We defied it with the current exchange rate. People also felt before scarcity would not be as bad, but we've seen the exchange rates, we've seen the price, and food scarcity is hitting us harder than we thought. We've seen the instances of things happening in the Russian and Ukraine impasse. We've seen how the Israel and Pakistan issue has even led to rip-offs around the Red Sea, and so global logistics is affected. So everything is hitting us hard. The question I like to ask, which is the question I like to ask every other person, of everything. Do we think we are at the rock bottom in terms of devaluation? Are we at the rock bottom in terms of scarcity? Are we at the rock bottom in terms of insecurity? Because the expectation is that if you are at the rock bottom, the only thing you can do is to start bouncing upwards. So that is the question that I would leave open to very respected persons I have on the panel. Dr. Olubunmi, I need to say that your credit history since 1975 is amazing. And that's almost 50 years of having a fantastic credit score. So thanks for being on this panel. I'm looking forward to learning a lot from you, and also to IK from Keystone Bank. So I'm looking forward to hearing and learning from all of you. The topic I'm asked to speak to, I try to just condense it into something simpler. I can imagine somebody saying, how do you debt management? How do you plan? How do you budget? How do you save? I think everything is around what are your debt management strategies. So what should you be thinking about? So if your debt management strategy is right, it tells you to plan, it tells you to serve, it tells you to do almost everything you'd like to do. And so I want to, if you don't mind, I want to keep the topic as simple as debt management strategies. So the entire one full paragraph of topic, I like to keep it simple. Maybe it's even economical now that we are facing austere times, so we need to try and cut everything to simpler sizes that we can manage. But I will not speak to it in a very esoteric way. I'll try to discuss it in a very simple way, because I understand the audience is meant to be people of different, diverse backgrounds. Either they are individuals, they are corporations, or they are even institutions. So we'll try to see how best can we discuss it such that we are communicating to everybody as simply as possible. Now, people at this point in time, with all that is happening in this country, the first thing is to ask, do we need to borrow? Do we need to take? What's your perception about borrowing? What's your perception about debt? I know that, and that leads me to what Plato once said. He said, we easily forgive a child who is afraid of the dark. But the real tragedy of life is when we are afraid of light. And what does that mean? It means as adults, as individuals, when we are afraid of the knowledge, the truths, and the understanding of how to navigate what we do, it's a potential for us not to advance and not to progress as we would like to. So clearly there are challenges, clearly there are issues. It would necessitate more prudent approach to what we do, but it does not take away the fact that we still have to bounce out of this present quagmire and live the life that would enable us succeed. So who are the audience? Like I've said, we are looking at the individuals, we are looking at the corporations, we're also looking at institutions. So we know that today there is a plethora of people have set up lending institutions. And I'm putting all of this in the context of First Central. So if First Central is a credit bureau, the kind of people that you definitely are interacting with are people that fall within these matrix of the individuals thinking about their credit score, the corporations looking at industry, and people that have set up their fintech businesses today because they want to go into that lending space. What do they think about and how do they navigate within this? So I'm going to keep the presentation as simple and as short, just to elicit things that will make us look about and ask questions and take the right decisions as we move forward. So clearly, what are there benefits in a good debt management strategy? Clearly there are. And as you can see, that for the individual, it creates a sense of financial stability. So if you have a good debt management strategy, it means that you have some peace of mind, because it is in the sense that you can meet anxiety can also come from the inability to meet your needs, the inability to meet the financial needs that you have. It can also throw up its own level of anxiety. And for corporations, you start thinking about the going concern of the institution. How can the institution navigate the different landmines that we see? And I'll tell you, in no small terms, even I work in the financial services sector, and I know how this plays out. You have issues around lending, issues around foreign currency exposures, and how this is playing out. So somebody that took a loan of $10,000 or even $1,000 2 years ago, that's $1,000 2 years ago, plus perhaps 750,000 naira. The $1,000, still $1,000 today, as at that time, is about 1.5 million naira exposure. So you can see the impact it's having on individuals and on corporations because of the devaluation. And the same goods that the person is trading on, if the person is trading on goods worth $1,000, how much will the person require to restock whatever the person sells? And whatever the person has sold at that point in time, how is the person going to, if he has sold a portion of it, maybe at 700, the balance that they have to sell, even if they sell it at the 1,500, they cannot recoup the entire $1,000 to go and restock whatever item. So clearly there's a challenge. And the challenge is necessitating the fact that, are we going to see the horizon, people having constraints in terms of how can they push their business further? How can they source funding? And if they want to source funding, maybe the person initially has collateral, has capacity for just $1,000 at maybe 430,000 exchange rates. And that particular person is now forced to take a loan of 1.4 million that the person never anticipated that they have maybe the heart to even take that level of exposure. And so people now have to start thinking about what really matters. How do I stay in business? How do I continue in business? How do I ensure that I do not default on my loans? Because clearly, a wise man once said to me that there are 3 sets of people that you just must be truthful to at every point in time. The first is your doctor. So you can't tell your medical doctor that you have stomach ache, meanwhile you have headache. Otherwise, instead of your headache, they will probably give you antacid for stomach. So you also cannot lie to your spiritual guide. So your pastor, your priest, you certainly will have to tell them the truth so that you can get the right counseling. And the third set of persons that you cannot afford to lie to is your banker, because the level in which your level of openness will determine the level of support you get. And this is now real. With the devaluation, it is now real. The amount of goods that you trade in, the reality is that you might not be able to afford that same level of goods with the same level of exposure. And how do you communicate this to your financial institution? How do you ensure that your lending partner is in sync with you? It's extremely important. So this is one of those moments. I think the first take home from this presentation is openness. Openness is important. You need to have some levels of openness in terms of bringing out the cards. Some people might, and also an ability to understand the trends, what is happening. So like I said, to the individual, it can confer a peace of mind if I have a constant management strategy. To the corporates, yes, it also helps to improve the cash flow and credit worthiness, in which case we'll talk about all the kind of things that might be considered. Therefore, lending institutions, so for lending institution, like I said, I'm speaking to people that are into fintechs and all that require credit scoring and first enterprise. Clearly, if you have a good communication and understanding of what is happening, it will reduce the default rates. So I understand clearly in several institutions today, the NPLs are soaring, and you cannot run an institution viably if the NPLs are soaring. So ability to sit with the person. So let's put it as this for the personal, the corporate, and the lending institution, this is the end state. The end state is that you want to have peace of mind, you want to have financial stability, you want to have improved cash flow, you want to have agriculture and higher profitability. And if this does not happen, if this does not happen, the reverse is exactly what will happen. So this is the end state. So how do we expect success to look like? And what are the management strategy plus? And so what are the tips into that debt management? Clearly, the 3 most taunted tips is ability to track your expenses, ability to be prudent for those that run businesses, and also speaking to even the SMEs, ability to differentiate between the business trading funds and your personal funds, ability to draw that line, and ability to differentiate between your turnover and your profits, and stay true to that. Then again, you also need to set your goals, because clearly at this point in time where additional financing will be required, might not translate to additional profit or incremental profits, but it is more about staying afloat and to stay in business, to remain in business. So setting those goals and understanding that these goals are meant for survival. It's not taking incremental borrowing does not necessarily mean that you're doing something bigger. It's more about how relevant will you be in your business if you don't have the stock and if you don't have the funding to run the business. Then, of course, this is coming from several feedback from people in the SME space. A lot of people talk about I don't know how to track my expenses. I don't know how to come up with a budget. I don't know how to come up with the funding that I require. Today, we are in the digital world. And the digital world has presented lots of solutions. My colleague would say the biggest teacher in the world, the most resourceful, most intelligent teacher in the world today is Google. Because you could go to Google and type anything and you see people have dropped in videos, guides, lots of things to guide you. Again, there are also several apps that exist, several apps to guide people on that. And so for the small SME that is thinking about how do I start, just pick one of these apps. Some of them are open source apps. And because you are only keying in information and tracking your expenses and creating a budget, the apps might be free. And most times these apps are free that are open source. So I like I said, these are the 3 commonly touted ideas, but I condensed it into 6. And the first I said you should start by listing all your income and categorizing your expenses better. Most times, especially for the SMEs, there's no discipline around it. So which means, to navigate these uncertain times, one of the virtues we need is discipline. Clearly. So with discipline, we'll be forced to put down, have good bookkeeping. Then the next thing is to set realistic goals. So in setting the goals, like I said, with the valuation, the amount of stock that you buy might not be, you might not be able to afford that amount of stock because clearly your capital has been eroded. So maybe you buy stock worth of $3,000, but you cannot afford that now because the same $3,000 when you trade it and buy instead of naira, by the time you want to buy, perhaps it's just $1,500 you can afford. So what does that mean? It means first you need to set reality. You need to decide how much debt you need to take to augment what you are doing. And existing equity. So equity is the funds you are putting into the business. From your savings, from family and friends, angel investors, that is the equity you are bringing into the business. Now the debt is the borrowing that you are putting to layer over your equity. And once you have realistic goals, you are determining your financial goals here that will be how much debt you require. The debt again is meant for the business. Then after that, the next thing you need to look at is get a proper app. The app is important because you need a tool to guide you. Especially when you can't run effectively if you don't have something that, if you are not accountable in any way. So you need to create your own levels of self-accountability. So I'm speaking to this in the context of an SME and an individual. For corporations, clearly this is where the ingenuity and the alignment between the CFO and the top management has to come in. So for corporations, clearly this is the point where as corporations, you need to decide on what is the cash flow projections you want to use to run the business. If you have an existing borrowing, then you need to start thinking about this existing borrowing and your existing stock. Can it help you to run the business and how much funding, additional funding you require, and come up with a realistic cash flow projections in the future. So first, we are speaking to financial planning. After the financial planning, the next step we're going to is how do you engage and structure your financing with a financial provider. So going back to what we are listing here, number 3, I said you should allocate funds for debt repayment. It means that the moment you go into a debt relationship, a borrowing relationship, we could listen. We heard Dr. Peters with his impressive credit scoring record. You have to create an impressive credit scoring record because that's a panacea for you to get more borrowing. Agreed, in Nigeria, there are efforts, concerted efforts towards building credit scoring. And these efforts that the likes of the First Country is championing, is something that will come to stay. Today, lots of institutions are going to digital lending. And to be under what underpins digital lending now is credit scoring. So whether we think that Nigeria is we're not digital, it's a big lie. And I tell you the statistics are showing that it's proving that we are moving very fast into becoming a fully digitalized country. First, are you aware that the BVN is now the bedrock for NIN? So the BVN today that banks are mandated to get from customers, that BVN is linked to the NIN. And with the NIN, without an NIN, you cannot get a lot of things. You cannot process a driver's license. You cannot process your international passport. So some gateways now are now linked to the digital backbone. And maybe later in the future, without your NIN, you probably will not have a voter's card. Now, what does that mean? It means the country is building a digital backbone. And just imagine where the NIN data is now linked to credit scoring data. It means that people can on the fly access financing even without going to a particular financial institution. In some other countries, financing is given to, you can be in one bank and you take a loan from another bank, and there's no problem because you know that the funds will always move whenever you want it to. So that is the kind of institution that we're building. And the PMI index. So the economists have what they call the primary mortgage index, PMI. That PMI index speaks to, if the PMI index is expansionary, it speaks to how much credit is going into the system. And if so much credit is going to the system, it shows that there's a potential for the economy to be revived. And that is where we are heading to. I agree, some of the lending today is based on price devaluation. Yeah, the Naira devaluation. So which means that it's not incremental stock, but it's the fact that it is price induced. But the reality is that even if people are taking that funding for it, it's still an expansionary indicator for the economy. Now, so I'll move straight to the next, which is the risk assessment. Clearly, for any business, the risk assessment is extremely important because without carrying out a risk assessment, it means you are walking blindly into the dark. So the risk assessment is an understanding of what are the potential threats to your business. And so, like I said, this is the point for introspection. In a landscape that is so uncertain, each person must be able to understand the potential threats to their business. So first, we said you must be able to track your expenses, separate your business funds from your personal funds. Secondly, use available apps. Thirdly, have a discipline around repaying the loan. And fourthly, ensure that you have a proper risk assessment of your business. And once you've done that, the next thing is either you have an existing loan or you want to go into a new borrowing. You should be able to have open conversations with your financiers. These conversations are extremely important at this point in time. There's no point trying to be brave or trying to be traditional around it. You don't want to talk about it so that your financiers do not think that you have a problem. There's a problem, there's a problem. And that's why we said for the three sets of people, you have to be honest, you have to be open. And so you can have different methodologies to negotiate and discuss the repayment of your loan. And these discussions are extremely important because to restructure or to negotiate the repayment of your loan does not necessarily mean that you're a bad borrower. No, you are only aligning your repayment with your cash flows. Extremely important. So you could have, there are different methodologies for individuals. You could have the snowball method where you have an array of different exposures and you want to use the snowball approach to take out the little ones first and push the bigger ones. You could have a credit card exposure, you have a digital loan exposure, you have the mortgage at the same time. And there are just so many. You could have a conversation around, let's push those bigger ones forward, let me take care of the smaller ones. That can be hard. There's no type of conversation you can have with your financiers that is not possible. Every type of conversation can be had. The only conversation that probably might not sell is when you want to completely isolate and pay your loans. So if you have an existing exposure, you can have, there's the avalanche method where you can think about paying a significant portion of the principal. And once you pay a significant portion of your principal, the interest portion now reduces because the interest is always computed on the principal outstanding. I use that and it's been helpful. So you can hear, even your presenter also has to do his own strategy around how to manage your debts. Now, for debt consolidation is a case where you have different types of loans. So rather than getting perplexed, you have one reminder on one particular exposure, the next reminder on it. You could decide to consolidate everything as one. And when you consolidate it, the next thought will now be, how do you now spread the repayment to align with your cash flows? It's possible, and you can have that conversation. For corporate institution, when I said debt consolidation, is also called refinancing and restructuring. So you could have a restructuring arrangement for corporates. You could have a refinancing arrangement. What is key to any form of repayment plans you are having is your cash flow. You should be able to understand your cash flow, test your cash flow, and build your repayment around that. Any repayment that is not aligned with your cash flow will always lead to problems. And so to the lending institution, it also speaks to this flexibility that must be created. Either the individual or the corporate is having this conversation, there must be a flexibility. During the COVID lockdown, there was no need for anybody to have a conversation because the reality was that there was lockdown. Nothing was happening. And so it only made common sense at that point in time to extend the repayment because nothing was happening. Even the CBN did that. They had to grant moratorium to cover for that COVID lockdown period because there was no single activity to generate funding. And a lot of people found it very convenient. And that is the flexibility for lending institutions. So at this point in time, of uncertain climate, flexibilities are important. And flexibilities have to be created because there's no point having a bad credit score, having a plethora of customers and bad credit score. It doesn't help anybody. So it's a case of understanding, openness, and discussion to work out that flexibility that is required. And of course, there should be a commitment to honor such flexibility. And so speaking to credit scoring, I just decided to bring the points that we've been talking about in credit scoring in one place. So for the individuals, we have to be timely in the repayments, we have to monitor, we have to also limit our exposure. So that's why I said we have to be disciplined, we have to be true to ourselves. The same with the corporates, transparent communications with the creditors, implement sound financial practices, have a healthy, open conversation around how you deal with those payments. And for the lending institutions, it's all around flexibility. It's all around self-reliability. So empathy is key at this point in time. Empathy from the lender to understand and situate. And in some cases, you may even need to advance some more because there's no way the person can come out of it if this does not happen. And so what is the panacea for the lending institution to do that? It's when there's good credit score. If the borrower has a good credit scoring, the person has been forthright in the repayment, it just makes it easier to understand at this point in time, accommodate the flexibility that is required, and extend as much as possible to support. And so this just leads me to the key takeaway. The first here is that debt management is essential at this point in time. We must understand that effective debt management strategies is crucial for financial stability. So I can't run away from it. Debt management is key. Second point that we should take home is the importance of a healthy credit score. Extremely important. We can't run away. So whether you like First Central, or you like Mary, or you like Deji, it doesn't matter. You can't help it. It's like nature. It's like air. You can't hate air too much that you block your nose. So it is extremely important. We must key into it and be mindful of it. The third point that we should take out is that we must plan. There's no way you can navigate this period. I was discussing with a colleague and he said, he was telling his wife, they protect money, I mean, the feeding allowance and payments, why we have to sit down now and start planning this for the allowance because this is how we have to now try and manage. So exactly, it's required for everyone. And so in conclusion, the first thing I would say here is that debt is useful, very, very useful. Don't run away from it. It's useful for accessing cash. It's useful for building credits. It's useful for investing in assets. However, we must understand the risks associated with borrowing and use the debt responsibly. I always like to say that debt should be used as a means to an end and not as a way of life. So you are borrowing to address one thing or the other. You're not borrowing to just live a lifestyle because the debt will be paid. And it's like digging a hole. So if you dig your well, clearly you should be ready to know that wherever you put the sand, you have to put it somewhere else. Extremely important. And just the last note there is that effective debt management is crucial for everybody. Whether you're individuals, you're corporation, or any institution, extremely important for everybody. I'll leave you with one question before I go. And my question to you is this: should debt be only for investment and not for consumption? So maybe Mary will answer this, or the other speakers will answer it. So what do you think? Should debt be only for investments and not for consumption? And with that, I want to say thank you.
Thank you so much. Thank you so much. You just let the cat out of the bag now. Should I move on with the question? Thank you so much. Okay, now I wanted to do that, the question, the learn and win section at the end of the event. Okay. No worries. When the time comes, Mr. Bass, please take notes. Mr. Bass, please take note of his question. Thank you so much, sir. Thank you so much. I really enjoyed listening to you. I really enjoyed everything you said. Honestly, you said that it's useful, make use of it when necessary. Very, very vital. For me, the financial stability gives peace of mind as an individual. Honestly, that kind of peace, I love it. Also, an advice to the lenders: ensure you keep your debt at a lower rate and also increase your profitability. Then to corporate organization, try to improve your cash flow. Thank you so much, Doctor. Thank you so much. We appreciate this section. Thank you. God bless you, sir. Okay. Ladies and gentlemen, I hope we're enjoying this event. Please keep the question coming. I have not seen questions. I don't know if my colleagues have seen questions. Please keep the questions up if you have any. All right. Our next speaker for this program is our keynote speaker. Is our keynote speaker, one of the founding fathers of the credit bureaus in Nigeria. He's no other person than Dr. Olubunmi Peters, Executive Vice Chairman, North-South Power Company. He will be speaking to us on the evolving role of individuals in the credit bureau space. In fact, there is no other person to speak on this evolving role of individual in the credit bureau space than a man that have maintained a perfect credit score, like Dr. Edmond mentioned, for over 45 years. You can imagine 45 years, over 45 years, even before some of us was born. The man has been performing. He has been overperforming, maintaining one color, the green color. And you know, one special thing about this man, that he was among those, he's one of those that pushed for the establishment of credit bureau industry in Nigeria. Honestly, you will hear that from him. Welcome, Doctor. Over to you, sir. Hello, Dr. Peters. Can you hear me? Doctor, if you are talking, we can't hear you. Oh, wow. Sorry, Doctor, before you come on board, Mr. MD, you said you have a comment to make after.
Not really a comment per se. I think more of just an addition to what has been said by Dr. Edmond. I think he nailed it perfectly when he mentioned that, I don't know, this video seems funny. When he mentioned that, there is something essential about crediting, and development economics is indeed very clear. I was just going to say, as rightly, mentioned by him, development economics is extremely clear. No nation in the world, no country in the world can survive without crediting. If there are 200 countries in the world, again, at least one let me see, almost all the countries in the world subscribe to that idea, and the idea is simple. Like you mentioned, there's some basic necessities that you cannot do without, whether it is food, clothing, or shelter. It is extremely important that you have it. And what then happens if at any point in time you don't have the money to cater for those things? Does that necessarily mean you don't survive? If crediting is going to allow you at least borrow money for your own survival, or to create an investment of any type that will then allow you, make profit or add some value, and from that be able to now, fend for yourself, then it should be available. It will be rather unusual and cruel to not have a system like that in place. And so almost every country in the world subscribe to that. I cannot think of a country where there is no crediting or there is no credit score. Even nations of the world would always borrow money for one purpose or the other. And I was just going to allude to the fact that it made it so simple and it made it perfect. Thank you very much, Mary.
Thank you so much, Mr. MD. Thank you for that comment. Dr. Olubunmi Peters, are you back, sir? I can give
yes,
you.
I'm back. I'm just lost my Wi-Fi for a moment there, but I'm filling in. I'll be with you shortly.
Okay, sir.
Good. Glad to be back now. You can go ahead.
It's actually time for you to speak. I was commenting on your ability that you've maintained a perfect credit history for over 45 years now. It hasn't changed any color from green to any other color. And I was telling the audience that you were one of those that pushed for the establishment of the credit bureau industry in Nigeria. So we're glad to hear you to tell us those amazing stories, sir.
Thank you very much. Let me first of all commend the submission and messages of Dr. Edmond Otaigbe. There's so much I can relate to what he has said. I mean, from planning, from budgeting, from commitment to pay your bills, from commitment to restructure when you are in, when you have challenges, and all that. The commitment of a human being to really deliver on his credit lifestyle, I think is very important. And I want to say I would have I'll come for more lecture. I mean, more brief on some few things, Dr. Edmond. Let me start by saying that my topic here today talks about the evolving role of individuals in the credit bureau space. It's an interesting topic, is to see how we as individuals can commit ourselves and what role we can play in the credit bureau space. But I'm just going to go through this in the form of a tale by moonlight story, a story of my experience in this credit bureau space worldwide, particularly my evolving in the United States, how it evolved, how it has, I've traveled with it, and where it is today. I think the theme of my submission, my story, is saying that it's making credibility a lifestyle. And that's what I mean, credibility. Making it a lifestyle was all I did through my journey in the credibility industry space of my life. My first encounter with credit referencing was I got to the US in 1974, and sometimes in March of 1974. But somehow by October or November of that year, a banker gave me a call. The bank was a small bank in a town called Wahoo, Nebraska. The banker called me and said, look, I am one Nigerian requested for a loan, and do you know him? Who is he? How do you think I should give him the loan? That was, I mean, to me, it was, yeah, I responded and I said, he's a gentleman. Yes, I know him, and whether the loan was given or not, I do not know. But I was just a young man of about 21 years old. And it never occurred to me that it mattered. But years later, I'll tell you how I connected with that simple request. Then again in 1976, I was trying to open another bank account in Omaha, Nebraska. And when I got to the bank, I wanted to open, and the lady went in, came in, and asked me one question. He said, you have an account in so and so bank. Why again do you want to open an account with us? I was shocked. It was like, how did this lady go to know? But interestingly, it's the fact that they have something called telecheck. I got to know that they have a telecheck. Telecheck is anybody who wants to open an account, they'll check with telecheck, and the telecheck will tell them basically if he has accounts in other banks, his performances. That was not a credit bureau, but at least just a referencing company. As a young man, of course, it was also an encounter, and it passed away. But it was significant also in dropping something in my mentality. I'm going to come back to the 1980 when I eventually got my American Express card, which I've held on even till today. Can you move on to the next slide? Ladies and gentlemen, it's interesting to know that by the time I got back to Nigeria in 1981, my mentality, my brain was already structured to understand that there's something called credibility. I got my American Express in 1980, of course, and it was like I must keep it jealously. I travel to the US, come back, and I keep going and coming back, use it as I need to use it, and come back. And for that 43 years today, I've maintained my American Express in a credible way with other credit that goes along over the years. What happened to me with that experience of 1974 was that after a few years, I started thinking, why would somebody call someone like me, a 21-year-old boy, to ask if he can give somebody a loan? I think what that banker saw in me, this is a town of about 50, the population of that town was about 50,000 or something like that. What did he see in me? What he saw was that I was running my account in a reasonably disciplined manner. And this is just a period of 6 months. How can he assess me over a period of 8 months or so? I realized that someone is always watching you. And it gave me the understanding that the world of credibility is to be born by yourself, not by somebody else. Years later, when I got the American Express, of course, you can see I took it as a gold and I followed through with it. Having maintained so much of my credibility over the years, on the 1st of January 2001, that is, I call it 010101. I sat down on a table with a couple of colleagues of mine, and I said, look, I think we need a credit bureau in this country. Why was that? Was that by that time, I was experiencing where individuals would take loan in 2, 3, 4, 5 banks, and you will not know, the other bank would not know where he took the other loans. I mean, the other banks don't know where he took his loan from. They don't know whether he took a loan from one bank or the other. And so he accumulates the debt, and when he can't, he just stops paying them. That shows that in a society where people were not regulated about credit referencing and ensuring discipline, people just went their way to do whatever they want to do. Well, of course, by 2005, I also got involved in encouraging the establishment of credit bureau in the country. I don't need to tell you all that story, but it shows in a way the depth of my commitment to credibility. It shows that I have built as an individual the focus on credibility. I'll also tell a small story about 2005. In 2005, while I was involved in attempting to join colleagues in building credit bureau in Nigeria, I took myself to the Nigerian Economic Summit group. I was involved. I was trying to be involved in letting the Economic Summit know the value of credibility and establishing a credit bureau in Nigeria, I can tell you none of the people in the finance committee, the commercial and finance committee of the, were willing to listen to my story. I recall I was sitting in a committee, finance committee of the ESG in 2005, and I was talking about credit bureau, and I can tell you that all the bankers there were like, what is this man talking about? What is this engineer talking about? And somehow along the line, what I did was to leave Nigerian Economic Summit, organize a team of people in which we organized with some senators on a private bill for the establishment of credit bureau in Nigeria. In an attempt to do that, of course, this particular bill went to the first reading in the House in 2006, 2007, went through the second reading, was sent to the committee to review and go public in assessing what should be done with the bill. It couldn't go anywhere because in 2007, 2008, the bill for a whole period of about a year just got stuck in the National Assembly. At the end of it, in 2008, the Central Bank Amendment Bill came to the National Assembly. And let me tell you, it has become history now because even the Central Bank did not know or ever thought of credit bureau establishment in the country. In 2008, Central Bank had no clue. But what we did was to smuggle the bill, restructure it, and smuggle it into the Central Bank Amendment Bill of 2008-2009. And that is how Credit Bureau was born in Nigeria. When that happened, of course, I think it was the greatest contribution I think I have to Nigeria, because I thought I've expressed myself to the fullest. Today, I want to say I'm one of the proud. This is a contribution that individuals can add to a society like ours, and what we can see, how we can perceive the development of credit bureau in Nigeria, credit facilities, how it evolved, and how our contribution to credit bureau establishment in the country should be something we can see as participants, not just that the credit bureau is there and it's supposed to survive on its own. Our need to become credible in our ways of life, I think, is very essential for credit bureau to thrive, to survive, to exist, and for the country to grow in more ways. I'll also not hesitate to tell a small story about, of course, I was privileged to be in the Federal Roads Maintenance Agency. And in the course of my stay there, I did something that was exceptional. Was to say that I decided and I said I would not give a job, a contract to someone if I do not have funds to back up that contract. And of course, this was in 2003, 2004. Of course, because of my, can I say, position on this, in 2004, I was kicked out of FEMA. It was as simple. The minister there would just not have me, not awarding contract. But I said, and 17 months later, I was recalled back to FEMA. Indeed, it was an appeal for me to go back there and restructure the organization. That is to show how maintaining good credibility and focus on credibility can add value to our society. One of the principles I established was that, look, I was entrusted with the job of FEMA as an MD, and I'm no more better than any other Nigerian. That is to say, if I give you a job in trust, you trust me, and you expect that if I give you a job, you expect that I'll be able to pay you. And if in trust, in the American environment, they call something the Antitrust Act. If in trust, I as a Nigerian give you a job and I know that I don't have the money to pay you, to me it's tantamount to an antitrust violation of my principle. And these are some of the things you look at and say adds value to credibility. Even though I wasn't spending money, but I want to be sure that I only give job to people who I can pay, jobs that I can pay. And you see there today, say 2020 experience. I think my first experience about the gift I got from American Express in 2020 was my membership award of 40 years, and I think it's still growing 43 years down the line. And I hope to keep it that way. My encouragement is to continue to encourage this society, individuals, and particularly the privilege of this platform to encourage people to start knowing the value of how credibility can add amazing color to your life. It has mine, and I'm hoping the message is coming across. Well, in essence, I'm going to be almost closing by touching on the future of global, the potential future of a global credit referencing and benefit. It is, I don't know where the credit will go in the world, but one thing we did when we were establishing and talking about credit bureau in Nigeria was to say that in years to come, particularly in this JAPA syndrome season, so people will travel abroad and you'll find out that their credit referencing is being sought for in the country where they come from. In the future, I can assure you that there will be a global credit referencing platform in which, so don't think you can go from one country and go to another, and you think you can get away with credit referencing and credibility in your life. I think that is all I want to talk about regarding the credit referencing and its benefit to the community where you find yourself. On the second bullet there, it says personal and sector-wide role of individuals in the credit financing industry. I think in essence, what I've said is that when you build credibility for yourself, the potential for your individual growth is unlimited. And in the course of Dr. Otagbe speaking, he said, you must sustain a good credit score. You must focus yourself on develop because you can walk to anywhere. Once they check your credit score, is the beginning of the first impression the credit giver is going to have about you. And it's going to be lasting on the potential for you to obtain that loan. Whether they may just look at it and increase your interest rate just because your credit score is high or low. And many values can come from you making yourself and building yourself with a life of credibility. So live a credibility lifestyle, and I can assure you that the world is your space, not just Nigeria. I can step anywhere in the world today simply because I have credibility in my space. Can you go to the next slide, please? The next slide is simple and closing with a thank you. But in this thank you, I'm asking that I thank everybody who has listened to this and hoping that you will also pass it on to your next generation, your children, the value of credibility. You may not have it at best now, but I can assure you I'm already educating my own young ones. I show them my credit card. I mean, you see it, member since 1980. It's not hidden, it's on the card. And it's encouraging, very exciting for children to see that, wow, this is a good thing to do. And on that note, I'll say thanks to everybody. I'm wishing you individually a wonderful credit life and the generational transformation in credit referencing lifestyle. Thank you very much.
Wow. I don't know what to say. Thank you so much. Thank you so much for the wonderful presentation. Honestly, what global credit referencing is already happening, sir, because we had a lot of international companies reaching out to us to conduct background check on Nigerians abroad. So it's already in place, sir. It's already, and I know as time goes, it will get better. Thank you so much for sharing your rich experience with us and also the brief history on the establishment of credit bureau industry you did share with us. Thank you so much, sir. It's so exciting. I've always, in fact, we love listening to you. We love listening to you. Thank you so much, sir. Because without founding fathers like you, honestly, the credit bureau industry wouldn't have started at the time that it did, just as you stated. And maybe the financial industry won't be enjoying the stability they are currently enjoying today. Thank you, sir. We appreciate you, sir. We also appreciate the Central Bank of Nigeria and every other person that played a vital role to the establishment of credit bureau industry. Thank you, sir. Ladies and gentlemen, without wasting further time, I know we are getting value. Well, time is money, and I know we are getting value from this program. Having listened to the evolving roles of individuals in the credit bureau space, it's also important that we introduce you to some of our products and services. So please, they just give us a few minutes of your time. We will do that shortly. Reason being that we know we have a lot of people joining us that are not too conversant with the activities of credit bureau industry in Nigeria and First Central Credit Bureau in particular. So that is why we'll have to utilize this time to at least speak to us briefly on what we do. Sorry, I'm trying to share my slide and speak to what we do briefly. We all know this program is brought to you by First Central Credit Bureau. Who are we? We are information and risk management company that compiles information on individuals and business entities regarding their credit information, their repayment behavior, collateral details, guarantor details, the history of the type of loans they've acquired. So we use all this information to produce what is called credit reports that is made available to lending institutions for decision making and also to others who might be interested in having their credit reports. And our vision is to be the best preferred and trusted credit and information reporting agency in Africa. First Central Credit Bureau is the first licensed credit bureau in Nigeria, and First Central Credit Bureau, formerly known as XCS, was incorporated in the year 2005, and we got our operational license in the year 2009. And since then, we've been doing massively well in the industry. We are the only independent credit bureau in Nigeria without any affiliation with any financial institution as part of their board of directors. This is a strategic decision to avoid any form of conflict of interest. First Central Credit Bureau has the largest subscriber base in the industry and a robust database that is growing on daily basis. Our system is very, very user-friendly. Our report, our credit report, is easy to interpret. You don't need to have much financial knowledge or financial literacy to be able to understand First Central Credit reports. Those using our service can attest to it. We have a very strong support client system. Oh yes, I like to talk about it very, very boldly. And First Central Credit Bureau, we are award-winning credit bureau, in fact, multiple award-winning credit bureau. And recently, the year that ended, we had about 4 different awards, all made possible by our loyal customers, who some of them are here. We want to use this opportunity to say thank you so much for your continued patronage. We have a lot of people that, like I said, we have a very robust database, and we have people submitting today to us, submitting data to us on daily basis. We have a lot of financial institutions giving us data on daily, monthly basis. We also have alternative data from the retailers, public sources, cooperative association, pharmaceutical company, schools, all these submitting data to First Central Credit Bureau. It's also worthy of note, as a credit bureau, we have the responsibility to provide our numerous partners and subscribers with a reliable platform that enables them to conduct credit assessment on their potential customers or existing customers to ascertain their credit worthiness. And also we provide them with a platform to report the indebtedness of their various customers. Data reporting or data sharing is very, very necessary, very, very mandatory, because there are so many benefits, as you've heard from the 2 doctors that have spoken to us today. As a lender, you stand to benefit. You secure your capital. Sorry, I can hear background. I don't know whose mic is on. Please, our moderators, can we mute our mic? So, like I was saying, as a lender, reporting or sharing your data with a credit bureau help you to secure your capitals. Yes, it's also help you to protect the lending ecosystem. Also help you to allow your customer to build a good credit history, like the doctor that last spoke to us said. Nowadays, you see people travel outside. These international companies are partnering with us on daily basis. What are they doing? They conduct background check on Nigerians. So Nigerians will live here, we get abroad, we want to get good job and all that. And immediately background check is done on them. So for those who have a good credit history, it's a plus for them to get their dream jobs easily. For those who have negative report, that is when you see them coming back on their own to pay. It's not that they repented to come and pay you, just because a background check has been done on them and they are informed and they quickly want to come back to update their information or to clear all their standings. So it's actually working. It's actually working. I can go on and on to tell you the benefit of data sharing. It is very, very necessary, mandatory, not just to First Central Credit Bureau, to every other credit bureau. So it also helps you to comply with regulatory requirements. So we have a lot of products across made available for individuals, corporate organizations, lenders, consumers, a lot of them. And all these products can be consumed via our API service. We can consume our product through our API service. We can consume them through our web portal. You can also consume them through batch requests. So if you are consuming our product through our API service, we'll have the REST API. We also have the JSON API. The REST is very, very light. So whichever one your team is comfortable with, you can use it. We are available 24/7 to support you through the integration and after the integration process. And our report, if you are consuming it through our web portal, you can do that on our classic portal, which is the regular portal. We also have the Better platform, which is an enhancement of the classic portal. It contains new features based on customers' requests. Features like being able to reset your password and being able to download your usage report as an individual, or being able to download your organization usage report monthly, daily, quarterly, name it as you want. All those features are there. Being able to download all those heavy credit reports, you can do that via the Better platform. I've talked about the batch process. You can also consume our products. So let me quickly run through a few of the products. So we have the Prime report, popularly known as the Nano product. Nano product gives you precise credit information of your customer in terms of the performing and non-performing. Yes, the customer is a performing customer. No, it's not a performing customer. It's actually a product for those that gives us little amount, like 10,000 and 5,000 and 2,000 and so at low risk. Then we also have the basic credit report. The basic credit report gives you summarized personal information and credit information and credit rating of the customer. It gives you specific credit information without complex details on the customers. This report is available for individuals and corporate organizations. We also have the detailed credit report. As the name implies, detailed credit report. It gives you the detailed demographic information of the customer, credit history of the customer, and guarantor or check information. Name them of your customer. It helps you as a lender or as a business organization to make informed decisions, especially when you are giving out a medium or long-term loan. This product is also available for individuals and also corporate organization. And we have the First Central Credit Score. The credit score, we actually have about 3 products that comes with the scoring. We have about 3 products that comes with the scoring. We have the NICO score, we have the S-Score Prime report, and the S-Score Consumer Detail report. So the score is a set of numbers used to represent the credit worthiness of a customer. It's actually 3 digits, ranging from 300 to 850. So the higher I score, the lower my risk. The lower I score, the higher my risk. I think that's the best way I can explain it. So the NICO score gives you your score and your classification. So whether you're a high risk or medium risk or fair risk or low risk, that it gives you that information. Then for the S-Score Prime report, I talked about the prime. So giving you prime information and your scoring, gives you prime report and your scoring to allow you make have more insight into your customers and credit worthiness. Then we have the consumer detailed S-Score report. So this report gives you all the package you will see in the detailed report plus your scoring. And another product that I love so much is the Consumer Trace report. The Consumer Trace report is actually a powerful credit product that connects our subscriber or our partners to their customers who must have changed their contacts, like telephone number, addresses, and all that. It helps you to discover defaulting customers who have alternative numbers. So if you have those customers and you've been calling and you cannot reach them again, don't worry, just sign up for this service. You will be able to have multiple details that you can use to reach out to them. So we also have the directorship credit report. The directorship credit report, I always tell people, is good enough to do a search for your corporate organization. It's also very, very good to dive further by conducting search on their directors. So the directorship report gives you information about the director, the companies, other companies is a director too, and how those companies are performing. And we also have the First Central Dishonor Check report. First Central Dishonor Check report is a very, very fantastic product also that allows you to streamline your onboarding process. So we do not just collect credit information from our numerous and data contributors. We also collect door check information. What is door check? So whenever you give out a check and it's returned up to 3 times, is a problem. So that information is being reported to us. So a lot of institutions does generate that information to ascertain your risk exposure and know how you can behave by the time they bring you on board. And also have the identity verification report. As the name implies, it helps us verify individuals, organizations' identity to ensure that who they claim they are is actually who they are. Another product of ours that I love so much is the post-check service. The post-check service is a product that analyzes a customer's behavior and identify those customers that have the tendency to come back for more loans. So from this, we've seen that there are people that are interested in people that borrowed multiple times, they are performing. We have seen people that borrow up to 5 times, 7 times in a year. So there are institutions that's their target market. So if you are like that, you can sign up for this kind of products. Another fantastic feature about this product is that it provides you with customers with non-performing status. Currently, that the account is not performing now, but has the tendency to switch to performing status in the nearest future. Trust me, it's very, very good. Then we have the portfolio monitoring report. The portfolio monitoring report gives an overview of your customers performing within your organization and outside your organization, helping you to identify target customers for your market. For instance, if Mary is your customer and I'm collecting 1 million from you, as same Mary has a capacity that she's collecting 10 million from another organization, why is she not bringing that 10 million to you? So it's an eye-opener. You can now strategize on how to go after Mary to get all the 10 million into your organization. It's also helped you to spot customers at risk before they start defaulting, before you start hearing story. They should have given you trains of how the customer's behavior has been. I can go, there are a lot of benefits of signing up and making use of this quarterly portfolio monitoring report. So if you're interested, please reach out to us. We'll do an elaborate training for you. We have the batch reporting. Batch report is actually for organization that does a lot of search in volume of calls. So instead of you sitting down to do that, you could just give us basic information like the customer's name, date of birth, and DVN. Then we'll use it to extract all the whole fuse or information that you are interested on very, very fast. It helps you to make effective decision. We also have the F-Alert notification service. F-Alert notification service, that's a fantastic product also. For lenders, signing up for the F-Alert notification, First Central takes up the task of notifying your defaulting customers on a regular basis. So educating them on the negative impact on having non-performing loan is very, very good, because we've seen testimony of people say, I didn't even know that my information is there. I didn't even know there's another person that have information. They hear so many stories, and they try to make payment on time to clear those bad debts. Trust me, it's a very good product. And for the individual credit report, the F-Alert, as an individual signing up for the F-Alert product, you get notified on changes that occurs on your credit report. For instance, if someone does a check on you, you get notification who the person is, the reason why the check was done on you. So if there is an update, you also get notification on regular basis. Then we have the reseller as a package, reseller as a business. So reseller service actually allow corporate organization to resell some of our products and make extra profit. So if you're interested, just reach out to us. Then we have value added price. So I brought this in because it's actually a system set up for people who are data contributors, those sending us data, to manage their data by themselves. So you can just it's very, very secure platform. It uses maker checker approach. So if you want to do updates, instead of calling on me or instead of sending mail, you could just log into the platform and update your information. It goes live. You can also update using our batch API service. If you're interested, or if you're submitting data to us and you're interested, please reach out to us. A training and the necessary login details will be given to you. Then also have self-inquiry details. I always tell people it is good to do a background, a regular check on you, on yourself, to know what is being said about, and not wait until you go for that employment and they deny you of being employed because the background check was done on you and your report is not performing. On regular basis, do check on yourself to whether there is need or not. So as an individual, as a corporate entity, can walk into any of our offices and request for your credit report. You can also do that through our website by ordering your credit report, and you can do that through our mobile app service. Then we have trainings, First Central Training Academy. We have listed courses that is available. You can reach out to us to get the training schedule so that we'll take you on board. If you want to reach out to us for further information, you can do that via this contact provided on our on the screen, or you can go to our website. You will see our contact in full. Thank you so much for listening. All right, Sarinemi. Let me stop sharing. So our last speaker for today is somebody that I respect so much with vast knowledge. He is the personal head banking in First Bank PLC. He will be speaking to us on emerging trends, opening banking and data sharing, and pros and cons alongside with opportunity for consumers and credit bureau. Let's welcome Mr. Ikemefula N. Nwachukwu for his presentation.
Okay, thank you very much, Mary. Please confirm that you can hear me.
Sure, can hear you louder.
Thank you so much. And I must commend you. You're a very good salesperson, because the way you sold this your product to us, I think anybody will want to buy. So well done. And I think I'm also fortunate to be speaking after two doctors. So Dr. Edmond Otaigbe and Dr. Lulu Peters, thank you for a very wonderful presentation that you've made this afternoon. That was really very insightful. Okay, so my own work has been made easier. My own work has been made easier by these two doctors. So I'm going to be talking about the emerging trends and open banking and data sharing being the focal point of our conversation this afternoon. How better to start a conversation around emerging trends than look at the risks that are inherent in the space in which we operate. We know that the financial services industry is not insulated from the risks that are inherent in the environment in which we live. And there are 5 factors that are leading to the risks that we will discuss. These 5 factors, at the end of the day, will narrow our discussion down to technology and then open banking, which is the focus of our conversation this afternoon. So if you look at these 5 factors that I have on the right-hand side, the economy, the geopolitical activities, societal factors, technological development, and then environmental factors are the 5 big category risk factors that are driving our daily living. And what I have here present a survey that was carried out by the World Economic Forum on 1,490 leaders. They were asked what they think will be the highest contributor to the global risk in 2024. And you can see how it stack up. They believe, most of them believe it to be environmental factors. If you go to number 5, At 39% respondents, they think it will be technological factors. Others thought it will be economic factors. So I'll quickly run through some of these factors that they envisage will impact the way we operate in the financial services sector before we now deep dive into the technology space where we'll talk about open banking. What are these major trends around the globe? The Ukrainian war, it started like a joke, and today the war is still raging on. And considering the importance of Ukraine in the supply of wheat all over the world, 24.1% of global grains emanate from Ukraine. We can see why you can no longer buy a loaf of bread if you don't have 1,500 to 2,000 naira. Then the aftermath of the COVID-19 pandemic, we are still grappling with the disruption to the supply chain. We are still grappling with the aftermath of COVID pandemic. Then there are social divisiveness fueled by misinformation and disinformation on the social media. And that is why the government has been speaking about censorship of the social media while the populace are countering that. The climate change. If you've been in Lagos in the past month, you will believe me that we had a very bad weather to contend with. There was so much dust in the air. Almost everybody I knew was coughing or was having flu of some sort. So the climate change is here to stay. Then there are microeconomic stability worries all reverberating across the world. High inflation rates all over the world. There is also geopolitical tensions all across. Then the BRICS, which is a new bloc that is working very hard to weaken the greenback, the dollar. Then we know about the Israeli-Hamas war, which is also grinding the world to a halt. So all these contending factors are pushing the world towards the brink. Then let us see in our own space in Nigeria, the macroeconomic dashboard for Nigeria, the GDP growth rate. The last time we had the best growth rate was between 2001 and 2010 when we grew by 7.97%. As at Q3 of last year, we were at 2.31%. Our oil production hovered around 1.6 million per barrel in October 2023. The lowest we ever had was in April at approximately 1 million barrels. The oil price hovered around $77 for the West Texas Intermediate on the 13th of February. Our external reserve was at $33 billion as at 13th of February, but the IMF has projected that it will go down to $24 billion in 2024. I am as worried as you are, especially judging by the next point there, the exchange rate. As at 12th of February, the exchange rate naira to dollar was 1,534 naira in the official market. In fact, on that day, the official market traded higher than the parallel market, which closed at 1,490 naira per dollar. There is ongoing friction between the government and labor about minimum wage. If you listen to the president of Nigeria Labour Congress, he said that the realistic minimum wage should be around 1 million naira if they are to contend with inflationary pressures. Then our monetary policy rate at 18.75% expected to increase by 500 basis points when the next MPC hold later this month. Our inflation rate came at 28.92% as of December 2023. The CBN had projected that this will moderate to around 21.4% this year. And then the banking sector is contending with fast-paced regulatory changes, especially in the FS space, in the CRR, the money transfer, in customer due diligence. And then we are expecting increase in loan defaults. Maybe why this conversation this morning is very important. When we've seen incremental growth in this stock exchange market, in the stock exchange. We saw market cap came in at 55.66 trillion on the 13th of February. So that is about the macroeconomic space. Now, let us look at what are the trends we are seeing that will shape financial services this year and beyond. Blockchain, artificial intelligence, and you can add generative AI and machine learning, data, embedded finance, open banking, where we are going to focus today, robotic process automation, RPA, cloud banking or cloud computing, regulatory technology, what has now been known worldwide as RegTech, environmental and social governance, ESG, and then cyber security. These are the very 10 strong factors that trends that are emerging in our world in 2024 and will shape how things are done in the financial services space as we go into the years come. This represents how the impact is already having across the world. Now, what is open banking? Let's narrow it down to our topic of discussion this morning. What is open banking? Open banking allows banks, enables banks to allow third-party players to have access to the customer's data. We know that data has been described as the new oil. This is made possible through data sharing between the incumbents and then these third-party players. The customer's consent must be obtained for this data sharing to happen. And the data sharing is facilitated by application interfaces, or what we call APIs. These third-party players provide the banks and the customers with innovative technology applications and services. The shared data will include transaction history of customers, their statement of account, their requests on the online platform or mobile app of the banks. Now, open banking was made possible by the Payment Services Directive of the European Union. This conceived that for banking to be safer, more competitive, and more innovative, we must promote collaborations and partnerships. And that was what led to the emanation of open banking. What is the history of open banking? It was around the 2000s in Germany that open banking originated, when two banks were testing the efficacy of their mobile apps. They brought participants from across 5 different locations to test the efficacy of the platform. And then the need for competitiveness in the banking fueled the origination of open banking. As we speak, over 50 countries, including Australia, Canada, and Singapore, have already embraced open banking. And 6 countries have already domesticated the Payment Services Directive that emanated from the European Union. We are all aware that the Central Bank of Nigeria released its guideline to open banking in March 2023 in preparation to full launch of the initiative in the country. So the box will show us that the EU has further revised the Payment Services Directive when they noticed the fact that open banking was exposing the customers to some kind of fraud. The PSD2 insisted on consumer protection, with promotion of innovation, and an improvement in the security of electronic payment. Customers were now required to provide at least 2-factor authentication, what they know and what they do not know. Then there has been strengthening of the General Data Protection Regulation to protect the customer's data to facilitate open banking across the world. In the UK, for instance, there was establishment of the Open Banking Limited as an industry global body that oversees the operations of open banking in the UK. This is just a pictorial view of what the history of open banking has been. Before open banking, what was the trend? Incumbents were sitting on proprietary data sets. Unfortunately for the incumbents, the banks, These data sets were disaggregated in nature. So lending decisions were incomplete because customers could not be assessed completely based on a 360-degree view of who the customers really were. So therefore, customer experience was also impacted negatively because when we cannot understand the customer holistically, we are not able to assess the customer and then able to provide the personalized services that the customers are looking for. The open banking has had tremendous impact on how things are done in the financial services sector. What are these impacts? There are exciting partnerships that I imagine. Open banking has encouraged competition and has fostered collaboration at the same time in the financial industry. It has improved data privacy and data security through the strict regulation that has been put in place by the regulators. It has also revolutionized lending because real-time financial data becomes accessible, and therefore credit scoring, credit underwriting, credit disbursement collections can be done seamlessly. Then open banking has empowered the customer more. The control of the customer data now resides with the customer. And that is the reason you must obtain the customer's consent before you share his or her data. Open banking has also improved advisory services because you understand the customer better. You are better to make decisions that will affect the customer, be it in investment, in borrowing, or in spending. So you're able to speak to the customer with a holistic view picture of who the customer really is. It has also enabled business development. Incumbents and third-party players with a holistic understanding of who the customer is are now able to create customer-centric financial products. What else has open banking done for us? It is important to understand what is accelerating this revolution by open banking. There are two critical factors, and those are customer trends and market trends. What are the customer trends? Growing demand for digital solutions. I'll be worried if any one of us here still want to go to a banking hall and sit down to withdraw money or to make money transfers. I'm sure we all now want to sit in the comfort of our homes and then press the key of our mobile phones and then make transfers with ease. There is also changing trust levels in the financial services sector. Before now, the incumbents used to enjoy a very high trust level, but that is gradually shifting. Even the fintechs or third-party players now enjoy some level of reputation. And that is why you can see the fintechs seriously penetrating the financial space, even in our country. There's also increasing relevance of integrated services. So customers now want you to understand their journey. This integration is leading to integration of normal services to financial services. So that distinction between other services and financial services has been narrowed. A customer want you to meet him at the point of checkout in a supermarket and be able to activate a credit, or process a credit required for him to enable him make payment with a buy now, pay later. So there's that integration going on. For the market trends, we are seeing fast-paced change in the market environment. How is that happening? We are seeing that the traditional revenue sources are thinning out, either by regulation or through changing customer behaviors. Therefore, both the incumbents and third-party players have the daunting task to discover, explore, and exploit new revenue sources, which open banking provides. There's also technology and regulatory changes, which, for instance, big data, generative artificial intelligence, cloud computing, that is fueling open banking. Then we have the rise in integrated ecosystems. It is difficult for you to listen to anybody in the financial services sector speak today without referencing ecosystem play. Ecosystem play enables you to leave the comfort of financial services sector and then delve into adjacencies like the telcos, like the merchant space, and then be able to provide financial services in those spaces. That has been made possible because open banking have allowed us to share data between the incumbents and then the third-party players. Again, with all this, it will be important to note that organizations who will survive and succeed in their approach to open banking will be ones who leverage the opportunities that open banking provides. And what are those? That will be in credit scoring and access to credit. So when I was told to talk about the impact of open banking in credit bureaus and then to the consumer, I thought that was very important, because credit scoring today and access to credit has been made seamless. Before now, you need to fill huge tons of documents, submit to the bank, possibly wait and be asked to provide a collateral. But today, you can sit down in your home, make a loan request by dialing a USSD string or logging into your mobile app, and then there is a profiling that happens instantly. There is a scoring that happens, and then a loan is disbursed into your account. That is what open banking has made possible. And that is why the credit bureaus come in. Because of open banking, the credit bureaus now have the much needed extensive data set that is aggregated in nature. And therefore, they are able to provide to the lenders very clean and detailed credit scoring and profiling of individuals or businesses who are requesting to credit. And what this will lead to is optimal credit risk decisioning. When you have a holistic understanding of who the customer is, as provided by the credit bureaus, it makes it easier for the lenders to make credit decisions and know that the customers they are lending to will not only take the loan, but they also have the propensity to repay the loans that is being advanced to them. There's also the aspect of personalized financial products and offers. So because of open banking, as I stated before, we are able to personalize our services to the customer. You know the customer journey in the social media space, for instance. You know the customer's financial history. You have the customer geographical data, just like Mary told us. So you are able to holistically review this customer, and then you make offers to the customer that are tailored to him and not tailored to everybody in the space. There are no generic offers anymore. Customers prefer customized, custom-built, personalized products and services. Then there's the aspect of business banking and accounting integration. Open banking has made it possible that merchants and individuals from their banking account can automate their financial processes, can retrieve their financial data, can reconcile their account, and can even generate real-time financial reports for themselves. So that is possible today because of data, aggregated data that has been made possible by open banking. We can also talk about instant payments and fund transfer, leveraging the unified payment interface that has been made possible as well. So fund transfers are easier, instant payments are easier. I'm sure if you want to make a transfer to me right now, it won't take you up to a minute, especially if the network is up. There's also the aspect of account aggregation and financial management that have been made possible by open banking. So account aggregation enables a customer to have a whole picture of his account that are scattered in all financial institutions, and is able to have a single view of his financial transactions, and is also able to manage his finances better. That is what open banking has brought to us. But what are now the pros and the cons of open banking? Open banking has improved banking experience. Yes, it has. It has increased revenue and referrals. It has also made better financial transparency. It has increased competitiveness, and then has given incumbents and third-party players market entry strategies. It has enhanced the efficiency of data sharing in a very secure manner. But there are also consequences. There is the data privacy and data security concerns. And that was why the EU had to revise the Payment Services Directive to PSD2, which requires customers to at least have 2 factors to authenticate their transaction. There is issue of regulatory compliance challenges. So the third-party players, some of them are not well structured. So that presents its own challenge when it comes to the operationalization of open banking. Then we have the integration and collaboration challenges. Most of the incumbents have legacy infrastructure. So integration is always a challenge. And then there's the aspect of business model transformation. Because the incumbents have been in business for a long, long time, embracing open banking will mean that they have to change their business models. And that really is never an easy task. All right. So how can we then implement open banking? 4 things are necessary. Collaboration, collaboration, and collaboration between the incumbents and the TPPs. Then optimization of platforms. Then the education and awareness. We need to create education between the incumbents and third-party players of the benefits of open banking. And then there will be the planning and execution, bringing the parties together to plan implementation and execute. As my MD will usually say, he says strategy without execution is always a hallucination. So what are we recommending? The CBN has already provided a framework, a very strong framework on open banking. The framework has spelled out standards for participants and then to promote transparency. What this means then is that the players in the financial services sector have to align by building capabilities and new business models. Such models have to foster strong collaboration and partnership with the data subject, the customer, at the heart of it. Credit bureaus now should seek to leverage a functional open banking ecosystem to enhance the accuracy of credit status reporting they provide to lenders. Credit bureaus should be well positioned to deploy more innovative services for lenders, leveraging clean and aggregated data. Customers, as the utmost beneficiaries of open banking, must be willing to take advantage of the exciting evolution in the financial services space. The existence of regulatory open banking registry ensures that only accredited players can have access to customer data, even if consent was wrongly given. So customer is always protected. Data privacy is always ensured. So in conclusion, note that open banking is more than a radical shift in financial operations. It is a revolutionizing of the entire financial services industry and all adjacent industries. And by embracing this new paradigm shift, financial institutions, credit bureaus, and all third-party players can leverage the power of data to create a banking experience that's efficient, personalized, and secure. As we continue in this journey into a world of open banking, let's remember that it's not just about changing one process or one system. It's about transforming the entire landscape of the financial services industry. Transforming how services are provided and transforming customer experience, one innovation at a time. It becomes very crucial for institutions or parties to invest in emerging technologies to stay ahead of competition in open banking space. We all must embrace these emerging trends and technologies to shape the future of the business that we do. I dare say, open banking is an inevitable win-win partnership between incumbents and third-party players. The bone of contention, which is the ownership of the customers, has been taken away from both the incumbents and the third-party players and handed to the rightful owner of the data subject, the customer. Thank you very much.
Thank you so much, sir. Thank you, sir, for shedding more light into this topic. I personally have gained a lot on this open banking topic. Thank you so much, sir. Ladies and gentlemen, we are gradually coming to the end of this program. But it is not over today until the Learn and Win promo winners emerged. So, Mr. Abbas, without wasting further time, can we quickly? Oh, sorry, before I proceed, the MD said he had a comment. Mr. MD, please, can we have your comment?
Not at all. I think Mr. Kim, he already nailed it. I was just going to mention once again that trust within any given system is simply a willingness to be vulnerable. If a bank gives money out to an individual or an institution, it is a vulnerability for the bank in the sense that it is based on an expectation for repayment. And like you rightly mentioned, there are a lot of risk factors around it. In the event that the person doesn't pay back, well, then the amount of money the bank has access to reduces, in many ways. And he mentioned a powerful thing also about open banking and the risk factor. Just like there's a risk factor of repayment for the bank, there are risk factors for individuals who do not pay back as well. Some of them take this money from one institution to pay back another institution, or take this money to run out of the country. In the event that that happens, well, the system will always have a way of getting back to them. They go outside the country, try to get an employment. This companies write to us officially, and they want to see how credible these individuals are. Once we say they didn't perform on their loan, they don't get the job. So it would always play out, even as a nation, whether at the individual level, at the corporate level as a nation, it will play out. There are risk factors around all of these vulnerabilities. And on the issue of open banking, I think it mentioned something very powerful. I was going to say, may also start the backdrop for policy. And I think we in-house may now have to also write to CBN on some of the things that he had rightly mentioned. Let's say, for instance, I'm a fintech or a player, a foreign player. Let's, for this purpose, just say I am AP or VP. And I have access to a lot of data by virtue of the amount of transactions that happens on my platform. In the event that I have more data than Nigeria themselves, do we have enough control measures and policies, in place to make sure that that data is not necessarily used in a way and manner that is detrimental to the country itself? I think you mentioned something about that on policy regulation, and I was just going to mention that. Thank you very much, Mary.
All right. Thank you so much, sir. Thank you, sir. Mr. Bass, are you ready for us? Our question and answer section, plus our Learn and Win section.
Yes, and Mary, thank you very much for having me, and thank you to all our speakers for joining us. Please, if you have any questions, feel free to drop those questions in the QA box. And be reminded that we still have the Learn and Win promo, and that will be immediately after we've taken some of your questions on the live session. And also, okay, so our first question will come from, sorry, hold on a second. Our first question will come from Chika Iguzoro. Sorry if I didn't pronounce that correctly. And I think this is directed to Dr. Okay, it's not wrong. Okay, should be to the MD. Yeah. The MD. So this is from Chika Iguzoro. He said the current uncontrollable exchange rate fluctuation has put a lot of SMEs out of business, which makes it practically impossible to repay their loans and default interest increasing. How can this be resolved? I want to know how this can be resolved. Andy, please, this is it for you, sir.
Sorry. Yes, please. Can you take that question again? I think there was a break in between.
Okay. He said the current uncontrollable exchange rate fluctuation has put a lot of SMEs out of business, which makes it practically impossible to repay their loans and default interest keep increasing. How can this be resolved? Is there any advice we can give to these people?
Well, I wouldn't say resolve, because resolve may be more national and global than what we at the macro level can actually play any intercessory role in. I would rather say the word edge would be a better thing to say. And if you look at notable companies all over the world, they would always seek arbitrage or edge themselves against foreign exchange losses. And that's because whether we like it or not, there is a high chance or a high probability that there will be exchange fluctuations. And if you're not careful, if it's not appreciation, it will be depreciation. So as a company or as an entity, how then do you, protect yourself from such dynamics? It's simple. If you have the money at time T, why don't you maybe procure some dollar, convert your money to dollar? Even as an individual, if you're still saving in Naira, you are subjecting yourself to a high amount of, inflation and loss, because of course the money would devalue by itself. So if you, as a country, as a company or an entity, you buy the dollar, let's say you buy at 1,000 Naira, and if tomorrow the dollar goes to 1,800, you would edge yourself against that risk. And though that may be over and beyond, maybe in some way, this aspect but the next set of our webinar will take serious cognizance of these things, and I think we would address that as it relates to credit, please. Thank you.
All right, thank you very much, sir. Now, the next question is another great question, and this is directed to Mr. Ikemefula. Dr. Shaki wants to know who the third-party players are in the context of open banking. Ikemefula, did you get the question?
Yes, I did. So third-party players, as the name implies, are the parties beside the incumbents, that's the banks, and then the customer. The customer is the owner of the data, right, which is the raw material for the open banking initiative. Then the incumbents, the banks, are the holders of the customer data. So the third-party players become the fintechs that will require the customer data to provide innovative products and services as a co-creation with the banks. So those are the third-party players. Any other player or participant that is provided services that is different from the incumbent, the bank who has the customer's data, is a TPP.
Okay, I want to quickly join all our listeners. Thank you very much, sir, to keep sending the questions in. We are still taking in questions. And also, before we move to Lena, I would like to inform all our listeners that we have recorded over 1,000 listeners across all our social media platforms and on this Zoom webinar platform. I'm going to the third question before we move to our Learn and Win session. There's another question here from Samuel Jagaba. Samuel Jagaba wants to know that he's asking for people like us in remote areas who don't have access to enjoy credit or loan facilities, how does this apply to us? Mr. Ikemefula, I think this is for you as well.
Okay, I think I saw that question. So Samuel wants to know how open banking will improve financial inclusions. And I assure him that open banking, yes, is one of the factors that will help us improve financial inclusion. And why is that so? If you look at our country today, there are third-party players who are already playing in the remote areas, who don't have branches in those locations. What are they doing? They are helping excluded people or citizens of Nigeria to be included financially. They are opening accounts for them. They are creating wallets for them. So they are already including people in remote areas without having physical presence in those locations, but leveraging automation and digital channels. So open banking, as it were, will also help to improve financial inclusions.
Okay, thank you very much, sir. Please keep your question coming, but before we take more questions, I want to quickly go into our Learn and Win promo. Please note, these are the rules, session rules with this promo. Answer should follow this format: name, phone number, email address, and your answer. And ensure the answer, ensure you answer the question correctly, as only the correct answers will be selected. Winners will be announced before the end of the webinar by our moderators and panelists. Please note that. So, are you ready? I'll be leaving the question for just 45 seconds. The 3 questions will come and they will be on the screen for 45 seconds, after which we will start and announce the winners. If time permits, we will take more questions. All right. First question. Mention the 3 channels through which First Central Credit reports can be generated. It has a B. Mention the 3 First Central products. So you're mentioning 6 items, 3 channels through which First Central Credit reports can be generated, and 3 First Central products. You can drop that in the Q&A box. I think it's the appropriate place to drop it so that we can sort very easily. So simply assist with the sorting.
Directly to the panelists.
Question 2. What is TPP in open banking? This is a very easy one. And finally, the last question. Mention 3 debt management strategies. Those strategies were highlighted by Dr. Edmond earlier in during his sessions. I highlighted 6 just to give you a hint to that. Okay, I think that will be all as far as the Learn and Win promo is concerned. Winners will be announced before the end of this webinar. But before we go, I'd like to take one more question. Okay, this is from Matthew Ukaigo. On the question, sorry, 1 minute. The comments are really coming in so fast, so okay, so let me take this one. This is a question to Madam Mary, actually. It said, on our service, you just introduced some products. Kindly analyze where an individual can sign up to, an individual can sign up with this very product. What is the financial implication of this process user? Thank you. I think what he wants to know, Muja Sadiq Ahmed wants to know how FLR's credit report and self-check report can be achieved individually. How an individual, that's for you, that an individual can get this report. That is
how you can get the report.
Yes, the FLR and the self-check.
Okay, you can get the report via mobile app, and also you can send us a mail. We'll bring you on board on the service. Just send the mail to info@firstcentralcreditbureau.com or sales@firstcentralcreditbureau.com. You get a response immediately.
Okay, thank you very much. Mr. Ikemefuna, please, I will need you to assist with choosing the winner for the second question. What's the meaning of TPP in open banking? And Tosin, please, the winner for the last question, you can assist with that. Why Madam Mary assists with the winner for the first question? Madam Mary, over to you. I will be announcing the winners much later. When you are done with the sorting.
I've been the winner for the first question. I'm only seeing
awesome.
a partial response.
Okay.
somebody said mobile app. Still another person said a different person, not the first person. Another person saying consumer trace reports. Another person saying web application. Please, if you're answering, just give us your details, provide your details and the number, the question you're answering and the response. So I've not seen anybody answering to the question. I only see mobile app, a different person, another person, credit reports. So I think, I don't know, I've not seen a coordinated response so far. Still going through.
Okay, I think we might consider the best answers in this case.
Yeah, that's what I'm looking out for. If I can get the best, a close. Okay, okay, one just came in now. One just came in. It says, okay, that should be Abosede. Yes, it said websites. It's a APP web portal. I just wanted to say API. I think she wanted or he wanted to say API. So I think he's the one that is giving us those answers. So Abosede is our winner for the day on the first question. Abosede, congratulations. We'll reach out to you after this event with your voucher card worth 50,000 naira. Yes, courtesy of First Central Credit Bureau. Thank you for participating.
Okay, Mr. Kemifula, do we have a winner?
Okay, yeah, I'm just trying to get the first person that answered.
Okay.
There are many people who answered it correctly, so I have to just scroll all the way to see who was the first person, because I think that's what it should be.
Yes, sir. The
very
first
first
to
person.
respond accurate.
Okay.
Madam President, do we have anything? Do we have a winner? Are you there?
Yes, I'm here. Still
Do we have a
checking
winner?
through.
All
Still
right.
checking through.
All right.
Okay, so the first person that answered correctly is Adenike Olabanji.
Adenike Olabanji.
Yeah.
Congratulations, you are one of our lucky winners. You will be reached out to as soon as the webinar concludes. Thank you very much for attempting. Thank you very much for participating. Thank you, Mr. Kemifula. So do we have anything?
Okay, Mr.
Yes,
Boston.
we do.
Okay.
Yes, we do. We have Dami Oladapo, and I think she just won already.
Okay, Dami Oladapo. Okay,
Yes.
thank you very much. Thank you. Dami Oladapo, congratulations. You are a lucky winner of shopping voucher worth 50,000 naira. Thank you very much, Madam Pussy.
Thank you.
It's on this note that I want to say thank you to everyone for the insightful question and for joining us today. And that concludes our webinar Q&A session. We hope you found it informative and valuable. Thank you once again for joining. We look forward to you joining us at our next webinar. Thank you.
Thank you so much, Mr. Bass. And thanks to everyone who have participated. We'll be reaching out to you shortly. Immediately after this webinar, we'll be reaching out to you. And congratulations. Honestly, I wish I'd been part of those participating. Thank you so much. Mr. MD, please, over to you for your closing remark. Mr. MD.
Yes, thank you very much once again. I can't thank you enough to all of the panelists, Mr. Kemifula, Dr. Edmond, Dr. Peters. I want to say a very big thank you to you once again. I think it's been a powerful learning curve for us today, and we're able to pick some powerful insights that will now form for advancement in terms of our own practice and perhaps even for instructive measures and policy. And to the voice of credit facilitation, the audience, we can't thank you enough once again for your participation, the interactive feedbacks you give us either by emails or phone calls. Like I like to say to people, Force Central is a product of both organic initiative and inorganic feedback, and mostly from the feedback we get from our customers. We can't thank you enough. I will be expecting more feedbacks. We're open to feedbacks. Please, please send us emails at sales@forcecentral.com, or if you have more inquiries at info@forcecentral.com. We're always ready and willing to attend to any of your feedbacks and questions. If there are things we could have done differently, things you think prospectively we can also do better, progressively rather, we'll be glad to have them. I haven't said that to the powerful team in-house in Force Central, and to every single individual that have been mastermind or contributors to everything we know to be the concrete system of debt reporting within Nigeria, I'd like to say a very big thank you. And don't forget to follow us once again on social media and to join our next webinar. It's promised to be very insightful. Thank you very much.
Okay, thank you so much, Mr. MD. Thank you, sir. To all our amazing speakers, thank you for doing a great job once again. Thank you, really appreciate you. Mr. Ikemefula, Dr. Edmond, Dr. Peters, thank you so much for honoring our invitation and speaking to us. And to the First Central crew that put up this program, thank you for all the job well done. And to all our amazing participants, wow, we had over 1,000 attendees. We had over 1,000 people that attended this webinar. Thank you so much. It is very encouraging. Thank you for leaving your busy schedule and listening to us. I hope you've gotten value. I hope you've gotten one or two things that will keep your business or your personal life moving this year, 2024. Once again, thank you to all our loyal customers. Thank you. We are grateful for your continued patronage. Please keep making use of First Central. Keep patronizing us because so that we don't think of Japan. Thank you so much. We appreciate you. We love you. Thank you. Bye, everyone. Thank you. We have to close now. Thank you. God bless you all. Amen.
Thank you.
Thank
Bye,
you,
Mr.
Madam.
Max.
Thank you.